Hi everybody, welcome to Trading Conversations. You are here, my friend, because you believe that profitable trading is one of the most efficient ways to attain financial freedom and can be achieved as long as you are willing to put in the hard work to develop your trading competency. Our goal with this show is to introduce you to the traders who have dug through the trenches and emerged at the other end. From the sharing of their trading stories, strategies, workflow, and best practices, I hope to help you shorten your learning curve as you embark on your journey towards trading mastery. Today's guest is the founder of Quanz Solutions, a Malaysian-based company that aims to be one of the best trading solutions provider for both institutions and retail traders in Southeast Asia region. With his designation as a Certified Financial Technician CFTe, by the International Federation of Technical Analysts, and also as a full member of world-renowned Society of Technical Analysts, MSTA. Our guest today is a highly sought-after speaker in Malaysia and is a regular speaker at the Kuala Lumpur Stock Exchange. As a full-time trader who has coached more than 1,500 new traders over the years, I'm sure he has plenty of stories to share with us today on how to navigate the market and to build up the competency to become a profitable trader. With that, please join me to welcome Ezone Constantine, the founder of Quanz Solutions. Hey Ezone, thanks for joining me in this episode of Trading Conversations.
Once again, hi Philip. I'm so excited right here for this interview, and in fact, I'm so excited actually to meet you right here on this interview. For me, you are the Asian Jack Swagger, traders. In fact, I'm so excited. Thank you so much for inviting me right here.
Wow, thanks so much for the nice words. If I can be the Asian version of Jack Swagger, I'll be really happy. Well, you know what? I've been scouring the internet and YouTube for a Malaysian-based trader, and trust me, it's not an easy thing to do. And to interview, and your name seems to pop up quite often in the various channels. So it seems like you have been doing a great job, not just running your personal trading business, but also adding value to the Malaysian trading community by helping them become the best trader they can possibly become. Now, while you are probably a highly recognized trading personality in Malaysia, I'm quite sure that many of our audiences who are based in Singapore and other parts of this region might not have heard about how you started your trading journey. So I think it will be really great if we can start off this interview by chatting a little bit about your past. Can you share with us how you actually started your trading journey, and when was that first occasion that you were introduced to the financial markets?
Okay, so I just want to share with you a little bit about my journey. Back in year 2007, that was the time when I was working as a chemical engineer. By profession, I was a former chemical engineer. And during that time, back in 2007, I used to hear this one audio, Philip. I'm not sure whether you know about this audio. It's by Robert Kiyosaki, Cash Flow Quadrant. So in that audio is always talking about, there's, employee, self-employed, and then there's a business and investor. So he continued mentioning about if you want to be successful, if you're looking for freedom, you have to switch your quadrant, from employee to business owner or investor. So I've been keep on listening to that audio for 1 year. Seriously, for 1 year, every single day, I turn on that CD. During that time, it's CD. Nowadays, it's called USB already. You can use microphone or Bluetooth. But I keep on listening that one to reprogram myself. How actually do rich become rich? Because in my family, nobody talk about money that much. You're talking about money seems like taboo at home. So I get a chance to know Robert Kiyosaki program, and it's mentioning about investing. So I was thinking about investing in what? I have no idea. So is it stocks or whatever? I have no idea exactly what is financial instrument is all about. But the reason why I changed into financial market is because there's something happened to me when I was working as a chemical engineer. That is a big wake-up call for me. In fact, what happened during at the time is while I was in the mill, servicing my clients, they used to be my very big client. So what happened at the time is actually there's one part on that area, the tank is blow up, is explode. So it happened at the time is I forgot to my little screw, my little Allen key at the time. So I'm asking one of the guys to have a look on my equipment. So I went about 5 minutes to look for my equipment, my key at the time, and the tank explode. So that was a wake up call for me. Like, look, I was highly paid chemical engineer at the time. And just imagine, my life is just like, can be gone just like that. So what happened to my friend at the time is actually he had a 45% second degree burn at the time. But that is already a wake up call. Like, look, I know that I'm gonna get high paid job for this, but anything can happen in that mill. So that's a wake up call for me. So I got about 1 week trauma at the time, and I decided like, what should I do right now? It's a wake up call. I should explore more things about my life. So during at the time, I love to, I love motivation program. I love Tony Robbins program. You name all the motivation program. I love motivation program and I love to teach people. But when I was working as an engineer, I'm not able to do that. So what happened to me is at the time is I decided to quit my job. It's crazy enough. I decided to quit my job and start to explore on the other side. So I venture into entrepreneurship time. So I involved in a small little e-learning company during the time back in 2008 and 2009. So I start to involve in teaching people like how to pass science, how to pass in terms of mathematics using a smart fun learning computer at the time. So it's actually more about edutainment at the time. But what excited me actually also at the time is actually how people make money in the market. So at the time, Robert Kiyosaki mentioned about he make money a lot in property. So actually, there's so many ways that you can make money, properties or investment. So I begin with start with investment in property. Sorry. So I begin with the property at the time and look actually how buy and sell. So I'm helping my family at the time to buy and sell. So we buy a piece of real estate, nice price, we sell it, buy low and sell high. Pretty much straightforward deal. But what happened at the time is actually when we got a for our family at the time. So we have one question: how actually to protect this money and how to grow up this money. So one day, one of my friend from CIMB Bank, which is at the time is a CIMB principal, is an asset management. She's a manager there at the time. So she called me up. She say, "Hey, Ezone, why not that you take some of your family investment and put it here?" So I said, "What is this?" And he said, "This is called the unit trust." I said, I said, I said, "What is that?" He said, "You trust." I said, "Can I trust?" He said, "Yeah, you can, because we have the rating. We have the 5-star rating. Look at this amount." So I have no idea how to read those papers. I'm not sure whether this happened to you, but I begin with that level first. I say, unit trust. Okay, so how does it work? So you just put your money here, next 5 years, you're going to get this. Rule 72, if you put here long, you're going to double it. So I say, wow, I think I'm going to discuss with my family, to put money on right here in the unit trust. So it happened to be what happened to my dad, to my father at the time, is actually he already put some of his money in unit trust at the time. And of course, I'm gonna tell you that not all agent, but some of agents just desperately want to sell you the unit trust and just put you into a simply any kind of a package. And what happened to my father investment at the time is really went down. The market is really like it's a wrong pack basically. But again, they will say that everything have a risk, right? Everything have a risk. So there's a small print that your capital might be affected. So at the time, my father, I think his capital is down almost like 20% at the time. So he was like not happy. What is this unit trust is all about? So my friend told me that actually, hey, actually there's so many ways that you can put your money in unit trust. So we will share with you that this package is going to be good. So what happened is actually I went into the unit trust. I said, no, no, no. I'm not just only going to put my money here. I want to learn this industry. I want to attend any program. So my friends say, okay, why not you attend this exam? I say, yeah, I want to attend this exam because I say I want to know where the money flow. So I went to exam and take it, and eventually I get my license in unit trust. I was studying at the time, so helping my family at the time. And I have several clients as well at the time asking me a question like, hey, what are you doing? I say, recently, our family put money right here in this unit trust, and in fact, that this year is really grow. So at the time, our investment at the time grow with this particular unit trust is actually about 8 to 10% per annum, and it go as high on the next couple of years about 15%. So we put somewhere around 600,000 at the time. So within just a couple of years, the 600,000 grow to 1 million. So this unit trust package right here, Philip, I'm telling you, this is very aggressive. 5-star rating, It's quite good. This fund manager did a really good job. But at the time, I'm not really sure actually. I'm just thinking like unit trust is okay. It's a, it's a basket of everything. So in fact, during at the time, I'm asking, while I'm become the the agency supervisor in that particular unit trust, I'm asking the question. I say, where actually this money go? I really want to know where this money go. How actually it can grow. I want to know. I'm so excited. And they say that we put in the stock market. I say, what is that? Stock market. Unit trust is actually related to stock market.
And you
Oh,
have no idea at all.
I say, I have no idea at all. I mean, okay. I say, where you put this money? I mean, which place you put this money? Is it Malaysian stock market, or you put in Singaporean stock market? Jakarta, or I don't know where. They say, no. China is going to be very good. So we're going to put the money right here in China. We're going to put the money in Hong Kong. We're going to put in this couple of company, and we have our benchmark right here, right there. I say, hold on. You mean stock market is the key? They say, yes. I say, I want to know about the stock market. They say, no, we deal in unit trust. You don't have to know about the stock market. Our fund manager, our fund manager will do the job. Your job is actually just, introduce a client, and, your job is settled. I say, no, no,
So,
no,
so,
no, no,
so,
no.
can I just stop you for a while? So you were actually helping to sell the unit trust at that point in time?
Okay, at the time, it's actually I'm just do for my family. But I'm so good actually in promoting. Whenever I think it's good, when my family get a result, I share with some of my clients. I say, look, this is what happened to my dad, and this investment is good. So I think this is can go for for several years. And at the time, hey, why not? So I'm thinking like, why not? I mean, I get introduced, and there's nothing wrong. I get a fee as well. I'm telling my client, if I introduce this to you, I get a fee from here. I got my commission from here. My client say, wow, you're so honest. You tell me that if you introduce, I get a commission. I say, yes, I get commission from this. They say, okay, since you introduce it, is no problem. You get a commission. So during that time, I was introducing, with several, clients, and I got a high rank quickly in a unit trust agency. From a just unit trust, I become agency supervisor. I got a few, yeah. But I got to tell you honestly, at the time, I was so good in introducing clients at the time, because at the time it's true that that package or that particular unit trust is really doing a good job. Really, really. I mean, that fund manager is really, I salute him. He did fantastic job. He know how to hedge. Very good. But Philip, I got to tell you one thing. I still have no clue where the money go. Seriously, I still have no clue where the money go. But suddenly they talk about the stock market. I say, I want to know. Like, say, for example, I say, the reason why people put their money in unit trust because they do not know what they're doing and they don't have time. So one of the biggest reasons is actually they do not know what they're doing. So that's why they leave everything to the fund manager.
And they just trust the manager.
You're right. And they just trust the manager. So of course, when there's time to go up, everybody happy. Of course, when they feel a little bit down, the client will be a bit shaky. So you have to explain them, tell them it's okay, this is gonna be for long term, so something like that. So what happened at the time is I'm asking myself one question: what if I have the knowledge and I have the time? Can I just actually buy certain stocks and actually get more than just 10% or 15%? So I start to ask this question already. How am I going to get started? So during the time in Malaysia, we have a security commission program at the time. So they invite all the agency and unit trust agent at the time to attend this special program, and they specifically talk about stock market alone. So I say, okay, this is my time. This is my time. I'm going to go there and I'm going to dig deeper. Actually, what exactly the stock market, how actually run, where the company raised the fund. I want to know where the money go, how actually this thing going to go up. So during the time, I met my first mentor at the time. His name is Benny Lee. What a very fantastic guy. So that is the first time, Philip, I'm going to share with you. That's the first time I got to introduce technical analysis. The first time I see Bollinger Band. Bollinger Band and also Bollinger Band width.
And how many years ago was that when you were introduced to technical analysis?
That was back in 2015.
Okay.
Just like about 4 years ago. So I was like, whoa. My mind is like, whoa, I mean, how you do that? I mean, okay, I'm going to buy here. If the price is the indicator going to show here, if the price is going to go here, I'm going to buy here, I'm going to sell here. I say, wow, that, what you call that again? He said technical analysis. I mean, what is that? I mean, the first time I heard about it, Philip, I gotta tell you, I have no idea. The word is so jargon to me, like technical analysis. Like, I'm like, what is this? They say, okay, guys, make it simple. It's a price forecasting. You just want to forecast the price. And quickly, my crazy thought began. Like, how many percent it can win? We are normal people. Question: how many percent it can be successful? I want to know. Can I get about 95% successful? With this price forecasting, can I get 95% a good result? And he looked at me at the eyes and he said that, no way.
So he was being honest with you.
This one of the guy that he's just telling honest thing. He says that, no way. I'm going to tell you that if the technical analysis, it can give you somewhere between 65% winning rate, you are great already. I say, what? 65%? For engineer like me, it doesn't so good. But he said, look, trading, that's mind blowing at the time. He said, trading is not about science. It's a little bit, but it's an art. Phew, that is actually, Philip, blow my mind. I say, is an what? Is an art. It's an art. Not all the time that you need to trade. You see the certain setup, then only you trade. Then I asked him a question. I say, okay, Benny, is it okay that we go out for a while? Like after this event, I just want to ask you a few questions. How you get started. So just like the question, I'm so excited because this is my chance actually, there's a one thing is actually, if you want to be successful, you better learn from those who already make it and already learn it, and you shortcut your process. So I'm the kind of guy. I love to learn from a good model, learn from a good mentor. I want to learn. I don't want to listen for those who say, don't touch the stock market, it's not going to work. Don't touch trading, it's not going to work. So I don't want to listen them. I want to listen for those who are already successful and make it. So Benny told me a story that, first of all, he said that you don't want to hear this, but I tell you that I blew my first 50,000 ringgit. Gone, he said. What? I say, how come? He said that actually I got the money actually for my college, and my parents sent me the money, and I'm not paying the fee to my college. And I took that money, he said that, and now invest in Kuala Lumpur Stock Exchange. And he went there and trade. And you know what, Philip? He lose all the money. Seriously. He lose all the money. He have no idea what went wrong. He thought that, you just can simply buy and went up and sell. So he determined at the time, I say, okay, I'm going to recover back this. So he started to work in one of the software company. He become a salesman with determination that I'm going to get back this 50K. So he start back. It's not an easy process. Some of you probably go to a process that you blow up this, you may take 3 years to recover. Is that right, Philip? This story that, sometimes that those who don't want to tell, but this is what Benny told me the story. It took him few years to recover. But when he managed to get back the money, 50K, and return back to the parents, he suddenly saw that what he become at the time, what method that he used constantly to generate that income. So during at the time, I got to introduce by him, and he mentioned one name. He said that if you want to go deeper, because stock market is have two ways. One is actually you can invest. Another one actually you can trade. So ask yourself, are you an investor or you're a trader? I say, I'm not sure. I might be both. I say, I might be both. Can I be both? He said, yes, you can be both. But which one excites you more? I say that probably trading. I say, probably trading. I say, okay, if you want to know more about trading, there's one guy that you should learn from him. He's one of the guy that is only in Malaysia that have master in financial technical analysis. Go and meet Fred Tam. And at the time I say, who is Fred Tam? I have no idea, never heard about him, because I say I'm still very new in this field. I say that you just go buy his book. I just went there and just find any good book. So I went to one of the bookstore and I saw one of the book. It stated there, how the guy turned, $11,000 to, how many millions? I think about 18 millions at the time. So his name is Dan Zanger. I'm sure you heard about this name, right, Philip? Dan Zanger, the chart pattern traders. So he turned 11,000 to 20 plus million. So he's begin with a chart pattern. I say, okay, you know what? I'm going to buy this book and I'm going to read it. So see how I'm going to start. So chart pattern is actually one of the methods that has been used for 100 years. 100 years already, this forecasting method has been used. So chart pattern is actually, you can see a pattern of bullish or bearish. So I went and read it, and trust me, during the first 2 days, I cannot stop reading this book. I keep on reading and reading, and I said that, wow, this is called rounding bottom. Wow, this is called double bottom. And I quickly apply one of the methods right here to my stocks. And
So at that point in time, you
I've
started
not,
trading already or no?
I've started already trading at the time. I started already trading, but I start with a small amount at the time. Begin with a family amount account together. We start with 50,000. But at the time, I look at the chart patterns at the time. And when I look at the book, I say, okay, this rounding bottom is stated that, we break this resistance. Okay, there will be a little bit pullback. Then it's going to go up high. I say, you know what? Just going to trust this. I'm just going to trust this. If this trading gonna, go wrong, I'm just going to cut in this level. Something that the risk that I can take. So I took the first trading pattern at the time, which is the rounding bottom, and there you go. I make my first 60%, Philip, my first 60% profit from that just rounding bottom breakout alone. So chart pattern for me at the time is really like blew my mind. But of course, if you ask me a question, did I lose a bit money beforehand? I learned this. Yes, I lose a little bit money during at the time. But I want to find myself by which mentor that I can trust. So I bought this book already first, and then after that, I quickly call to the hotline of that academy called F1 Trader Academy. So I say that, is there any chance that, you can come to my hometown right here to teach? And then they say that, how many of you? I say that we couple of us. I say, I'm going to invite several of my friends, and we are ready to learn from you, sir, for 3 days. And Mr. Fred said, okay, I'm very happy and I'm excited, and I'm going to come to your hometown, which is my hometown is Kota Kinabalu, Sabah. So he went to my hometown and see a bunch of the traders right here, so excited to learn from him. And I tell you what, Philip, the first time when he opened up his chapter, I gotta tell you that he's really like a professor teaching technical analysis. It is so deep. It is so deep. He's teaching using a standard guideline of International Federation of Technical Analysis. What is, chart patterns, what is, he tell everything in during that trade. And of course, when technical analysis, I gotta tell you that it's a very dry subject. So you need sometimes, to digest in, you have to be, obsessed into it. But during at the time, he shared with us like, okay, guys, I've been teaching this, I've been teaching that. I saw some of you is like almost sleeping and almost yawning. How about like this? Let's jump into the trade. He said, let's jump into the trade. Oh, everybody's so excited at the time. Okay, let's jump into the trade. I saw that you all, like, when I'm teaching, you all not paying attention. Is it too dry? Everybody said, yeah, sir, it's like, university level, It is true. Technical analysis, you have to go step by step to learn to digest. So we said, okay, why not that I trade right now? Whoa. Then we said that, okay, let the traders, show his talent. So during the time, he opened one of the chart. That is the future crude palm oil.
Mm.
So he looked at the time and he say, okay, what I'm going to do is I'm just going to put 5,000 ringgit. Just put it there. Okay, and I'm going to do my first target here and second target here. And if nothing went wrong, if everything went wrong, I'm going to put my stop loss. So we saw everything. He put his stop loss, he put his TP, he put TP2, he put TP3. And then he locked in and the trade went in. Whoa, I got to tell you that I'm so excited. I say, okay, what if he's wrong? Let's see how he's going to cut loss, So I'm more excited actually about how he cut loss if the trade went wrong. And I want to see from the trades, because just to let you know, Fred Tam is a 30 years experience in financial market. There's one time that he ever make 1 million per day profit. So I want to see actually how he trade. So he trade relaxing, so relaxed at the time. He said, I'm just going to put this money here. And he's just said that, okay, I'm going to put the money here for a while. I'm just going to have a cup of coffee for a while, and I will be back soon. So he went out there and have a cup of coffee, and we all look at the chart like, okay, looks what's going on. And then a few minutes later on, we see 50 ringgit. And after that, 100 ringgit. And then that, 500 ringgit. And then when he come back, he said that, oh, so what happened to my trade already? Did I lose money? So the question first, he asked, did I lose money? Means, did I manage to handle the trade risk? So this is the way that I'm learning that this kind of trade is so different. He talked about lose first. He's not talking about profit first. So it's totally different mindset, Philip. So when I was meeting the other mentor, prior to Mr. Fred, there's a few mentors that I met. Most of them is actually they're all talking about profit first. But this mentor is different. He's talking about what is my lose today. He began like, how much I lose today? So when he looked like, oh, seems like doesn't touch my stop loss. So let's see how much I make already. So during that time, he's already 500 ringgit. And he just flipped his card like, not too bad. Just leave it there for a while. Let's go and have lunch. And we all, one of my friend, I got to tell you, Philip, one of my friend, his mouth is like this, like, whoa, that is cool. That is cool. I want to be like that. I want to trade with just 5,000 ringgit. Now it's already 500. It's like 10%. Just within a couple of hours, my friend, suddenly his mouth is like open like this, Philip, like, oh. And I have to put his mouth like, okay, buddy, stay cool. Let's go and have lunch. And we went and have lunch, and we come back. The whole trade he closed with 1,100 profit. So it's about like 20+% ROI within short period of time. Boom! We're so excited, like, wow, this is technical analysis is all about. So I got a chance to actually to learn from him. And one day he invited me, like, Ezone, that, I need I need a very passionate, team, to teach, to guide, because you see now, I need to take care of a little bit of my health right now because I've been teaching for the past 30 years, you mentioned. So I like to find a very, very good, mentor and tutor. Would you like to be a tutor, but at the same time you become a tutor? I would like to teach you more about technical analysis. So for me at the time, it's like, wow, that is a great deal. So say, okay, why not? So during 2016, he invited me to be in the F1 Academy at the time, to go together with him while he's teaching me. He giving me all the tools and the skills. He want me actually to empower other people, because he said that in this world today, a lot of people want to trade, but they're looking for mentors. Just like me, I really, really want to trade, and I'm looking for a mentor. Just like you, Philip, somebody really want to trade, they're definitely going to to follow you. And in fact, for those who are watching right now, I want all the traders all over the world, please subscribe to Philip Teo program, the online summit, whatever it is, join in, because this guy is amazing. Philip, he really make sure that everybody is coming here together. So at the time, I get a chance to learn from Mr. Fred Tom, and he introduced me to another mentor from Singapore. I am very sure you know this guy. His name is Mr. Nicholas Tan.
Oh, yes, Nicholas.
Oh, honestly speaking, okay, I just want to share with you, almost all the Singaporean traders or mentors that I met, you all are fantastic people. You all are amazing people. You are meticulous, very studious. You work hard. You're very analytical. So I get a chance to meet Nicholas Tan. So Mr. Fred introduced me. This is the guy from Singapore. He write a book about Forex, about this, about that. So wow. And he been experienced in the market for like 20+ years. He's already been in a bank. So he shared with me his experience and his trading method. So he's very famous with Ichimoku, box patterns, and also the Elliott wave. I'm sure you like Elliott wave, right, Philip?
No, I don't actually particularly subscribe. I mean, I had a look before at it, but I suppose that it just didn't fit my worldview of how the market works.
Right.
But I mean, I've heard of other traders that swear that is the thing that really helps them become profitable.
Oh,
So,
yes.
so I suppose maybe that's just something like not my calling yet.
Yeah. But you're more in what? Like a chart patterns
Yes,
or?
I'm a price action trader. So
Oh,
I
okay.
predominantly, I prefer to look at clean charts and just try to understand the market psychology just by looking at how the price move using basic trend lines, support resistance levels at most with moving average. And it's really about, to me, it's really more about the risk management aspect of it. Yeah.
I see. Oh, that means you are a clean trader then. You like
Yes,
clean.
I'm a very, very clean trader. I mean, I have, over the years, I have tried
Right.
to look at all sorts of indicators, Elliott wave, Fibonacci, and I suppose it's due to my character as well. I mean, most of the time I came back to the minimalist way of trading thereafter. Yeah. So, so that was about 3 years
Yes.
back. So Fred actually straight away, even though you have no experience at all, and
Yes.
he straight away invited you to learn under him, be an apprentice, and start to
Exactly.
train other people.
Exactly.
Was that a hurdle that you have to overcome? Because I mean, when you start to train people about it, and people ask you, "Hey, so how have you been trading? How's your performance like?" And is that a difficult thing to get people around to believing you that you actually knows how to trade and you have the qualification to actually teach them? And that was only about 3 years back. So can you share with me more about how your market experience evolved at that point in time?
Okay, so it's like this. You know the sprinter, world fastest runner in the world. His name is Usain Bolt. I'm sure you know
Yep.
about this guy. Now, if you ask one question to his coach, did his coach, get the world record? The first question is, because he needed a coach. During the time, Usain Bolt is not that really good. He's good because of his coach. And if you ask the question, did his coach ever set the world record? Mm-mm, no. So what Fred Tam teach me actually is like this. What happened is actually there's a two ways to look at it. Some of you is actually, like some of us is actually got a gift. Really have the gift is actually coaching. Coaching means what? You actually able to see one person, actually you able to open that person real true potential. And after you actually open that person real true potential, that person will actually taking care from that level and go to the next level. So that's the function of the coach actually to open that person mind. So basically, Fretam is actually say that you don't actually need to be the super millionaire, to teach them. Then only you can become a coach. Like say for example, like you know the method of actually how to gain 10% or how to gain 20%, regardless is what is your amount of your account. The trading technique is the same. I say, yeah, that makes sense because at the time I'm just only start with 50K, and I got only small. At the time I haven't, we hit like 500,000 or 1 million, no record like that. But I have a client. I gotta tell you this, Philip. I have a client that he have a lot of money. He got a few millions of money. So he came to me one day and he asked me this question. He said that seems like you can teach in technical analysis. What is your record? And I gotta tell you honestly, I said that I don't have amazing record, but I have a method that what I use personally to gain as this much as this much. But my capital is small. Of course, if my capital is big, the trading technique is the same. So he looked at me with a feeling of like, this guy telling the truth. You're not BS me. You're telling me the truth thing. I say, yes, sir. I mean, look, you have a big amount. I don't have the big amount, but I have that technique actually right here to share with you. Would you like to learn from this? He said that, yes, I'd like to learn this. So he took one of the trade, one of my client, he actually having a bigger capital than me, and I share with him that technique. And just imagine that he shared with me after he learned this few method, he started with about 500,000. And the first 3 months that he used that method, he generated his first 100,000 profit. How about that, Philip? How about that?
So
Yeah.
$100,000 within how long?
Within 3 months.
Within
Trading the
three
Malaysian,
months. So
yes,
that's
trading
about
Malaysian
like
stock
a
market.
20% gain in 3 months.
Yes, yes.
And is that based on like intraday kind of trading
No, 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 no,
methodology,
no,
or
no,
was it
no.
based on a longer time frame?
So he going to swing. So somewhere between 3 weeks to 3 months. So some of the stock that he swing 3 weeks, 2 weeks, 3 weeks, 2 weeks. Some is actually he keep about 2 months. So after combine all together, he gained almost 100,000. So it's combination of like 2 weeks, 3 weeks, some no intraday. No intraday like you trade today, you settle at the end of the day. No, 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 no. They hold. Mostly they have to hold it slightly longer. So this is the client that actually I'm talking about. Like, they ask me a question like, did you have, a big success record? I say, no, but I have this method. So where you learn this method? Of course, right here from my mentor, Fred Tam. That's why that he mentioned to me. So I'm going to guide you along the way. So of course, I got to tell you, Philip, I got a lot of hurdles when during the first time when I share, because everybody asking me, what is your prior breakdown? What do you have? What do you have this? So it's a bit challenging for me. You see, everybody is talking about a coach and they want to say that, did you achieve this? Did you drive Lamborghini already? Did you have a big mansion already? So that is my expectation before they, like they're gonna ask me this question. But to be frank with you, throughout the most of the trader that I met, because so far right now I've been coached almost like 1,500 people already, 1,500 traders already, from younger age to senior age. Actually, to be frank, very seldom people asking me what car you drive, how much money that you already make. They only ask me a question like, can you guide me actually what should I do with this next step? What should I do with this kind of stock? What is the technical analysis? So I was amazed by that, and I start to continue, to increase my confidence actually in teaching. So I want to thanks a lot to my mentor Fred Tam, and of course my Sifu Nicholson, and of course few of my mentors like Asri, so and Benny Lee. They're helping me a lot. So this is my program right here. I start with both career right here, Philip. I start by become a trader. At the same time, I'm a coach as well. So I got a two career suddenly. And
I see.
do I get paid in both? Yes. I got to pay with you. I got paid in both. Yes.
I see. I see. Fantastic. So before we go on to the part where I will actually dive deeper to ask you more about your trading philosophy and the
Mm-hmm.
methodology that you personally advocate and trades. Now, to those of you who are watching this interview right now, before I go on to pose more questions to Ezone with regards to his trading experiences, I just want
Mm-hmm.
to take a moment to share with you another opportunity to listen to Ezone again beyond this interview. In
Yep.
the upcoming Online Trading Summit 2019, Ezone will be doing a presentation on this particular topic, the 5 rules to buying stocks on the dip. Right,
Yep.
Ezone, can you share a little bit more on what you'll be covering in this presentation, just to give our audiences some kind of insights, and how could your presentation be helpful for our audiences out there?
Okay, this is going to be very amazing topics. 5 rules of buy on dip. Now, I want to share with, especially for those who trade in stock. This is the experience that I managed to get during the past 4 years. So I want to share with you actually how to buy, because honestly speaking, Philip, that I like to buy when the stuff is cheap. Okay, so a little bit cheaper, and I don't like to lose much money. I'm not saying breaking out is not good, but I'm saying that when you buy on dip, it gives you more rooms, okay, for your money management. So I'm going to share for this coming training program or coming online summit program. I'm going to share with you the 5 rules of buying on dip, and this kind of method right here, I'm going to share with you that it's not only can it be applicable in Malaysian stocks, it's also applicable to New York Stock Exchange. I mean, if those who are trading, international stocks. So the reason being is like this. The reason why I want to share with all of you why you need to learn these 5 rules of buy on dip, because number one, it gives you money management, a very, very good, well-controlled money management. Means risk is well controlled. That's number one. Number two, you don't have to be in front of your screen all the time using this method, because some of you is intraday trader, you have to look it every day. Now, this method is actually designed for those who are very busy, you have a lot of work to do, you have a house chores, you're busy with meeting. If you're doctors, you're busy with your, operating theaters. So this method right here is actually allow you to actually, after you coming back from your work, you can watch it and you can monitor what is the performance on the daily. So if there's any sudden surge or any volatility happen in between, you will not scared by this. Okay, and then number three right here, the reason being I want to share with you these 5 rules of buy on dip, because for me, the return is incredible, incredible. So based on my work right here, usually is quite easy for you to gain somewhere between 5 to 10% or even 20% potentially. Potentially, I gotta say this word, potentially. All right, so this is the 3 things I did. So I'm so excited for those who are about to join this online summit. I'm going to share with you these 5 rules of buying dips for the stock market here. And if you get a chance to learn this, use it and apply it, and hopefully you will get amazing result from this.
Sounds great, Ezone. I'm sure our audiences will be looking forward to hearing what you have to share with regards to buying stocks on the dip. Now,
Yep.
for those of you watching this video right now, if you have always personally favor buying stocks during the pullbacks, but not very sure how to go about implementing such strategy,
Yep.
be sure to check out Ezone's session in the summit. All right, and to find out the date and the time for Ezone's session in the Online Trading Summit 2019, please remember to pay a visit to onlineTradingSummit.com. All right, Ezone, back to more questions on your own personal experiences of philosophy and trading best practices. All right, so what is your main philosophy about trading? Okay, with regards to your own personal trading as well as what you teach your students, that let's say if there's 3 main things that you would like to impart to anyone who is starting out to trade, what would the 3 main things you want them to focus on?
Okay, first of all, trading is a skills. Okay, trading is a skills. Uh, Everybody can learn this. For me, this is the one thing is trading is a skills that you must learn. Because why? Because why? One day you do not know what exactly happened to you. At least one of the things that at least you should have within you, if say for example you don't know how to run business, you do not know how to, open up a new franchise or what, at least trading you can use this method right here as a skill for your surviving for your family. That's number one. And then number two, I always have this philosophy whenever I trade. This is what I've been using every single day. Every time I trade, I always begin with how much I can risk first. What is the risk that I can control first? So this is one of my philosophy every time I trade. So what is the risk that I can control? Okay, that I can accept. Like what in your book right here, I have to be agree with you, Philip. In fact, your book Traders Mentor is really, really awesome. Like Adam Grimes, Gary Yang, one of the traders that I feel I got resonate with him. I feel like I've got connected with him, Gary Yang from Singapore, right? So I only risk about like 2%, or the most maximum if I'm become so aggressive, I will only risk 10% from my capital. But I will most of the time I will play around 1 or 2%. Okay, and then the trading philosophy right here. Trading need to be fun. Okay, trading need to be fun. I'm talking about, it's not that you just simply be happy so much when you make so much money, or you being so devastated or sad, when you lose money. But I want you to look actually as the overall concept here is actually trading is fun, because you will learn how you grow along the process. You want to see actually how you're able to actually grow your portfolio into certain period of time. So for me, one of my philosophies actually whenever I see trading is one of the extra subject right here, and I want to be fun with it. And plus, I just want to share with you that whatever happened in trading is only remain there in a trading. I will never bring it outside from what happened. Like say for example, if I lose money right here, or I just cut loss right here, I will never bring that one outside from that trading room. Everything will stay in the trading room. So one of my philosophy right here is actually I just want to share with all of you is make trading is in a fun way.
I see, I see. All right, so let's get started with a little bit more about a chat about more about the technical analysis part of
Okay.
your trading flow.
Mm-hmm.
As we mentioned earlier on, you are a designated CFTe as well as MSTA. So I
Yep.
suppose that technical analysis would be the main forte for you. All right, so
Absolutely.
on a technical analysis perspective, do you
Mm-hmm.
think that everything you learn in technical analysis really works, and how should one actually decides what is that technical analysis tool to use? Is there some considerations involved, or should he be like using all the technical indicators and overlays and stuff out there for his trading?
Wow. I think this is the most interesting part right here, because technical analysis is actually very, very broad. I believe is what you feel the same, because you don't want actually the same indicator use, giving the same, same signal or same amount. But like this, like what you mentioned, you like a clean chart, right, Philip? Like what you
Yes.
mentioned, you like clean chart. I am actually the same with you. I love to begin everything with a clean chart, but I'm going to impart first the most basic part right here that will never fail in my chart. I must have a trend line. Trend line is always be there in on my chart. And the next thing is right here that I will use is actually chart pattern. I'm gonna begin with this first when I do my technical analysis. Then I will overlay the direction, which is I will introduce the moving averages, exponential, either short, medium, or long term, and I'll be part of it. But most of my major decision until today, I'm gonna share with you is 80% is based on technical analysis. But I will put 20% consideration on the fundamental.
Hmm.
Yes, I cannot say that I let go all the fundamental and I will swear by God that I only will use technical analysis to the rest of my life. No, no. I will bring in fundamental as well, because uh, some fundamental right here, they're going to work together. They will be synchronized together. So for me, like if a technical, but I'm going to begin with technical analysis first. If I see that the TA is doing good, then I'm going to see the FA about the company. So if the fundamental is already good and both of them synchronized, it gives me more confidence actually to write this stock. But I'll put 20% of it, on this. Now back to the question about you don't want to use, you know, the indicators, so that you don't want to have two indicators actually showing the same thing. So this is what we call micro linearity. Okay. So, you don't want actually the two indicators showing the same thing. So you need to discard certain, indicator that's showing the same thing, and actually you want to put another indicators, to be in part of it and to show different thing. Now, in the market, it's only three ways happen in the market. It's always been like this. Either the market is uptrending, it is going to be downtrend, it is going to be sideways. Indicators like trend following, they're gonna be doing great, definitely, Philip, during during when it's trending. But when it is sideways, you need to introduce another system, which is the OBO system, the overbought and oversold system. That this time right here, that you see the trend following move, especially like moving average, you're gonna get whipsaw here. So you need to actually design a system that is actually be smart actually when it's trending, but be a little bit smart also when it's going to be in a sideway. So you need to have that kind of what you call indicators right here to read, and it's able to switch. It can tell you, okay, the trend is already is done right now, it's going to go to sideway. Okay, so sideway you can play a different trading style, but when it coming trending again, it resume again, you can use back the method you have. Okay,
I
so
see.
yeah.
Okay, so Ezone, can I just backtrack a bit, because there's one question I should have asked before I get you to dive into technical analysis, and this
Oh
is
yeah.
probably one of the most difficult issues that most traders, especially new traders, deal with, which is before I even do analysis on the individual instruments, how do I even shortlist such a big universe of instruments out there in the world on a global stage into a manageable size before I even start doing analysis on the individual ones to look for trading setups, especially considering that in modern days, it is pretty easy. I'm not sure whether in Malaysia that's the same case as well. It's so easy to trade any instrument on any of the exchanges globally. So how do you filter down that tens of thousands or even hundreds of thousands of instruments into a smaller subset that you can actually do your analysis on? What is your personal take on that?
Okay, so if you want to have a very good technical indicator that can help you actually for your trading, regardless for your stocks or for your currencies, it has to begin with the first step is you need to have, you cannot escape this. You need to have a moving average. I'm sure you very agree on this, right, Philip? You need to have a moving average, but moving averages is divided into many type of moving average. You have linear weighted, you have simple, but my favorite right here, if for those who want to trade, for me, I found that like exponential moving average is the best because it's always stick with the price. It understand the character of the price. So all that my technical indicator, I always put in moving average, exponential moving average. And like say for example, you trade stocks. You cannot run away with this moving average. You need to have a 20, 50, 100, and 200. It's like a common thing, but it's very powerful. Yeah. So you have a 20, 50, 100, and 200. Commonly 20, 50, very nice for you to do swing. Okay, this moving average. Next thing that you need to have on your trading system, you need to have stochastic. Okay, stochastic by George Lane. So for me, if you want to actually, beside that, you having trend following, you have stochastic is actually to tell that when it's actually the certain price right here is already overbought. Okay, when overbought or when into a level which is the oversold level. So the stochastic actually can tell you, because the good thing about stochastic I found out here is, yes, it's true, stochastic is going to be very, very good during it this sideway, but actually when it's trending, stochastic is also can be used as to empower back the trend. Regardless, for those who trading in Forex, you will find out that stochastic actually can help you also during when there's a pullback for you to actually do the short for your markets. Yeah. So yeah.
Is that how you attempt to filter down the instruments to look at? Are you talking more about looking for trading setups already, or are you talking about using stochastics and moving average to narrow down your watch list to a certain extent?
Oh, okay. You're talking about stock watch list, is it?
Yes, yes.
Okay.
How do you narrow down, let's say, if let's say on Bursa, a few hundred stocks, or
Okay.
in a US market, there's few thousand stocks. How do you actually narrow down the list to focus on which one to look for trading setups in the first
Okay.
place?
So first of all, you're talking about the proper flow of actually refine everything into the best stocks to select. Am I right? Am
Yes,
I right, Philip?
yes.
Okay. First step, what I'm going to do. This is what I'm going to do back in Bursa. Number one is my general rule here. I am going to go begin with the volume unit. So anything is about 4,000 lots and above, I will make sure that it will be put under my watch list. The reason being is, if I have any stocks that above 4,000 lot, 10,000 lot, 100,000 lot, or perhaps 500,000 lot traded within that day, it's showing that this stock actually do have liquidity. Okay, so you need to have a liquidity first. You don't want to buy a stocks that you buy in a big amount and you get a very nice ROI on your portfolio, but the day that you want to sell, Philip, there's nobody want to pick up. That's a big problem, right? I have a friend,
Yes.
like, to buy the stocks, and he showed me his portfolio and say, hey, Ezone, look at my portfolio, I get 95% right here. I say, sell it. I cannot sell it. I say, why? The liquidity is not that good.
So he's the one moving up the price. And if he sells, he's the one moving down the price.
Exactly. So this is the thing. So for me, number one rule is actually I must have a look on the volume first. So I'm not sure whether in Singaporean stock is going to be the same, but I'm sure that the concept will be almost similar. Am I right? Am I right here, Philip?
Yes, yes,
So you
yes.
got to look at the liquidity first. Liquidity means actually you can buy or sell. So I'm going to look at the volume of 4,000 to 4,000 to 10,000 and above. 'Cause, my mentor, Fred Sam, he liked to see 10,000 lots daily traded and above. So you're gonna begin with that one.
Yeah.
So next thing is right here. I'm gonna begin with. I'm going to look at the stocks first. While I'm already screening it out, we actually have a special screener as well. We call it the breakout screener. Okay, the breakout screener, which stock actually just break out freshly from consolidation point. Okay, so from like flipping point and suddenly it's breakout. Breakout not only just breakout nicely, but it's also breakout with a nice volume. Like today's volume is actually higher than previous 5 days or previous yesterday or previous week. So it's showing that the buying interest is already there. Means somebody already have the interest, or the player already have the interest actually to push that kind of stock. So I'm going to filter that one more into another new basket. Okay, so I'm going to begin with volume first, and I'm going to begin with the breakout first. So while I'm divided into what is all the breakout, here is the next step right here. I'm going to break out which one is going to be a penny stocks, which one is not so penny stock, which one is a bit expensive. So main chip, like a blue chip,
Blue chip.
yeah. So it's divided into until to my penny stocks. Why I want to do so is because usually the penny stocks, okay, the penny stocks, it can go as high as it can, but but when it fall down also, it can fall down as much as it can. So it's very volatile for the penny stock. Okay, so which means I'm still going to trade this kind of stock, but I'm not going to put a lot of money there. So I'm going to segregate. So penny stocks, normally you need to open yourself with 15% risk. Some of you say, wow, 15% is a lot, but yeah, welcome. That is the game of penny stock. It can volatile between 15% to 30%. Look, you're buying 20-cent stock, 30-cent stock. Do you expecting just a 5% risk? It's not gonna work.
So when you
So,
mention like 5% risk or 15% risk, is that the amount of risk on your capital, or is that the risk you're talking about based on the price?
based on the price. I mean, if say for example you have 10,000 capital altogether, okay. So now you mentioning to yourself that I only can risk certain percent of amount. So you have to reverse back that calculation. But when you put back into the penny stock, you have to consider how, like say for example, penny stock, the risk after we calculate the volatility will give you about 15%. So you have to reverse back the calculation by reducing the number of amount that you invest in that particular penny stocks. Yeah, in order for you to make up overall amount of the risk that you can handle. So I'll begin with this three, because the reason being is actually for a lot of Malaysian traders, they like the stock actually that moving fast, quite high. They don't like the blue chip stock because the blue chip stock when they move is like you know
Move up
Hmm,
slowly, pulls back.
yeah, but when it go down also, Philip, is gonna go down. Yeah, very slow. So they like to find the stocks that actually between moving very fast and very quick. So one of the tips right here that I always like to share with a lot of traders right here is I always tell them, how do you know that kind of stock is actually moving very fast or very slow, even though stock is priced of $1 or 1 ringgit or 2 ringgit in back in Malaysia. Okay, so how do you know that stock is actually is a very, we call it like, we put it like into like weight. Okay, which stock is a light weight? Okay, which one is a middleweight, which one is a heavyweight? So normally my tip is actually I will share with them is look at the issued and paid up.
Hmm.
Look at the issue and paid up share. If the issued and paid up share, the number is very small, within like 100 million to 500 million. Okay, this kind of stock is very easy to fly. So you like,
Do you mean the market capitalization of that particular stock?
yes, yes, and also the number of issued and paid up share to the market,
That
like
means
what's
the
the
shares
number.
floating out in the market.
Exactly. What is the number of floating shares in the market? So if the market have about like 100 millions to 500 millions unit shares to be around, so this kind of stock is actually is easy to be pushed up, easy to be pushed down as well. And I'm gonna go for middle one is between 500 million to 1 billion. Okay, and of course the heavyweight is that they're gonna have a billions of unit
And
offer
more.
and
Yes.
more. So usually they will ask this question like, which stocks that actually can go up high and low because my capital is very small. So which one actually I can roll slightly better? So I will normally tell them that you can begin with the middle or lightweight. But the problem is, with the penny stock and the lightweight is the risk, the volatility. It can go as high. Even I gotta tell you, Philip, that in Malaysian stock, some of the stock here that really can go as high as 100% a day. Seriously, it can go up also 60% a day. It can go up to that range. So we also have the stock that can go up to 30%, right? So they have this kind of trade, go. So this is one of the method I share with them that look, you're gonna find the stocks that move to this level. Okay, so that's how I'm going to screen on it. Okay, so what I share with you first is gonna be based on the volume, and after that I'm going to segregate also based on the price. Now I also have another method that I select to further refine. Okay, to further refine is actually look at the candlestick, the price pattern. Now I'm going to share with you this. Seriously, what happened in Malaysian market right here? I can know by just look at the chart. I can know that that particular stock is manipulated. I don't like to say this word, but I can tell you that there's a stock is actually been manipulated by certain players. They call it the syndicate. When we heard the word syndicate, it sounds like very bad, right? But no, syndicate is actually the player that actually they move up the price up and down. I'm sure that you know about this, Philip. It's in for the past 20 years. So I gotta tell you that when I look at the certain charts right here, I'm gonna tell that even though the price is cheap, but I will tell you that this stock right here, don't touch it because I know that it's been played and been controlled by certain player. Okay, now uh, the regulation in Malaysia right here is still gonna be improved because this one is it's gonna take times, but I can look at the chart right here and I'm tell to all my trader that this kind of chart, no, 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 no. Don't ever think about to touch it. Because that kind of chart I would share with you that they have a pattern, like it's very well organized kind of pattern, the chart. So normally I will tell them, please don't touch this kind of stock. They will be going out from my filtration process as well. So I'm going to tell with them that trade the stocks that have a very flow, very,
Yes.
very good
Yes.
flow.
And I suppose that such stocks that can be so easily manipulated, their liquidity shouldn't be too high as well, right? Otherwise, if there's a lot of market participants with a lot of money flowing in and out, it will be hard to try to manipulate them in the first place.
And
So,
yeah, I gotta tell you that I feel sorry to hear this, but this is what happened, especially for those who have a very small capital, because usually when they have a small capital, they say that, oh, Philip, I couldn't afford the stocks that $1, $2. I only can afford the stocks that 20 cents or 15 cents. There you go. They fall into the wolf trap, where the wolf is ready to eat them because they still don't know, they don't attend any courses, they don't train, they just want to buy cheap stocks. Okay, so when they buy these cheap stocks and they get affected, and they didn't know that the cheap stocks is actually have such a huge volatility that sometimes it can drop even 50% within that day. Can you imagine that they have a small capital right here and they get walloped by these penny stocks?
Exactly, exactly. That's what very often I try to get people to stay out from stocks like that as well.
Yep.
And usually I'll just tell them, if you do not have enough capital, you have to go to stocks of such low price, then you better just go and earn enough money, build up enough capital base to go for the right kind of stocks that you should be
Oh,
trading. Yeah.
yes, yes. That advice that you give is a nugget goal. Yes, they need to get some big capital. But what if they it's not about like if you have 5,000 ringgit or $5,000 Sing dollar, or even you have a 2,000 Sing dollar. But if you buying even a good stock, you still can gain. You see, you still can buy about $1 stocks, right? In Singapore, you still can buy even a stocks like 2 ringgit. But these kind of people right here, they say that, oh, it's like $1. I only can get a few units. It's not
Yes,
impressive. But they forgot about it's all about return on investment. So most of them, those who newbie, most of them, they always have this fantasy of like having a small capital, buy a penny stocks, then boom, it's 100% on next week, and they end up losing more money in the market. Yeah,
I see. I see.
yeah.
All right. So let's move on further from here. So you mentioned about the breakout system that you use, and I suppose that you also do look at buying on the dips, which is the other way of getting in. So the
Yes,
one buying on the dips, we'll leave it for the summit.
that one will be
You
on the
will share
summit.
more
I'm
about
not
it.
going
Yeah,
to
we're
share
not going to
here.
talk about it. Let's just quickly talk about the breakout strategy.
Right.
The main trading setups that you prefer to look at, and how do you actually set your stop loss once you decide to get into the trade?
Okay, so what happened in Malaysia right here, because previously I'm together with Fred Thumbs. So normally our breakout system is we're using a turtle system. I am very sure that you know about this turtle system that is very famous by Richard Dennis. It's actually originated by Richard Donchian.
Onchen, yes.
Yeah, Donchian. So what happened is Richard Dennis, he adjusted a little bit the parameter right here, and he build up all these turtle traders, right? I believe Jerry Parker is, one of them. So, so we use this method right here. But what happened is actually, for me, Fred Tam is a genius guy. He's one of my mentor, and he's a very genius guy. And what he do is actually he study whether this turtle trading system breakout is actually work. It's as a standalone, or you need a stabilizer to coming in. So what he discovered right here, Philip, in Malaysia is it doesn't work that well. The
Not for Malaysian stocks, you mean?
exactly. It's not for Malaysian stocks exactly, but if you adjust it and you introduce stabilizer together, mm, the result is different. If you use the total trading system alone, it's not going to work well. But if you introduce a stabilizer between, then you can have a good result. So it's true that we use a total trading system right here for a breakout, okay? And we use the lower channel as our stop loss, okay? So the number that we use is 2010.
The lower channel as a stop loss. What do you mean by 2010 then?
Okay, so you see in channel, they have 20 days, 10
Mm.
days. I believe that you know about the channels, right?
Yes, yes.
So the channel, normally the upper one, we use 20.
Mm.
Okay, for the lower one, we use 10, slightly sensitive. It's not 20, it's 2010. Okay, so the 10, the lower channels right here is to become a trailing stop. A trailing stop while the stock is continue, going up high. So we will use the lower channels right here to become our trailing stop. Now, it's also can act as your stop loss directly. Okay, so that's one way. Number two, we can use the 50 moving average as a stop loss.
Mm.
Okay, so that's the second method. The third method is we tell to the traders up to themselves is based on their risk appetite, because I believe, Philip, you know that none of us have the same risk appetite, right? Another
Yes.
traders, they have 15% risk appetite. Another person, they have only very low risk appetite. So the third method that we tell to our clients or to the traders is it's up to them. They can decide what is their risk appetite. So that is the third method. Now, when you talk about there's a few methods like using the lower low, right? Using the low as as a support. Usually the channel of a the channel of a downtrend will take in care that too. So that's why we don't need to look at the lower level already, because the channel already did a great job for that one. So that is actually how we do the stop loss for the
I
daily
see.
trade.
So to summarize it, it means that if the price goes to a new 20 period high, you get
Yep.
into the trade.
Yep.
And once you get into the trade, if the price drops below the 10 period low, the stop will be hit.
Yes.
And you will continue to stay in the trade as long as the price remains above the 10 period
Yes.
low point, in a way.
Yes.
Okay, so do you actually apply this in shorting stocks as well, or do you predominantly suggest just using this for a long perspective, long angle?
Exactly. It's only for long perspective. You don't use this one for shorting. I don't recommend. I
I
don't
see.
recommend, because if for those who want to use shorting, you have to optimize, bit this system.
Yeah.
Again, what we see here is pretty much that we can see is because Malaysian stock is, I can say that is quite almost technical, not too bad. It's like, of course, like some people say, is the market is inefficient, right? So, but in Malaysian stock, like, okay, still not too bad. The technical part in this area, still can be used. But if like other part right here that you probably need to optimize a little bit, because sometimes when it drop, you maybe need to change your channel, maybe to 8, maybe to, to 7. You have to check based on the character, and you have to do study on that. Like based on this method right here, there's a book, there's a thesis on this already. It's done by Mr. Fred, and he already submitted even into International Federation of Technical Analysis. So it's not something that he talked. He did a study. There's a number on it. So if somebody want to say that, there you go. There's a data to show. So, but of course, it can be further optimized. Like for the shorting, yes, you need to have a channel that a bit slightly we call more sensitive, because I think this is like a law of gravity. Sometimes when the stocks it take time to go up high, it will take time. But Philip, you realize that when it drop,
Yeah, it tends to be faster.
that's why some of trader, when the stock is ready to to drop, they usually love to short more rather than they long. I've seen this kind of trader that they short the CFDs, the CFDs, the option trades. They do this kind of thing, more towards like bearish side. Yeah.
I see. And do you generally suggest that this kind of methodology can be applied regardless whether it's like a long-term position trading or maybe even short-term intraday trading? Can the methodology be similarly applied? Maybe just need to change the parameters?
Yes. Okay. This is a very interesting question. Now, can this method use for the intraday? Like somebody today, they just want to buy today and they want to sell today, and that's it. They just want to make quick. Tomorrow they start another new day again. Yes, but with one condition here. The condition is actually make sure that the breakout is the one. It's not like already 2 days breakout, the third day breakout. It's like 4 days already breakout from the consolidation point. It seems like a little bit too late already. So don't take that kind
Okay,
of trade.
so it's about intraday breakout, which means you probably got to use intraday periods for that breakout criteria.
Exactly. So now for those who want to swing, honestly, this program is nice for you to swing up the position trade. This kind of method is very, very good, because of course there will be sometimes it'll be volatile a little bit, but it's able to actually give you a room to sustain. So that's the function of the stabilizer that I mentioned to you, that one trader actually need to have is actually the moving average of 50 days, 50 EMA.
How do you use this stabilizer then?
Okay, you see, most of the traders sometimes that they want to know, sometimes sometimes it's already breakout and continue up high, so they have a question like, ooh, is it time to exit now, or is it this one is too high already? So sometimes when it go up high, it pull back a little bit. Some of them, they get freaked out a little bit, right? Like, oh, it start to pull back. Look at my ROI, it start to drop. Instead of a 20%, now it start to drop to 15%. They get a little bit shaky, and they start to say, hey, my 5%, if I know that, I will take that in 20%. But you need to have a stabilizer there. Look, hey, it's still within, it's still upper in the 50 EMA, so you're still okay. Like, so now it give the trader like, oh, okay. It's still within 50 MA. So let's see. So when it touch, usually Malaysian stock market, usually when it touch 50 MA, it can act like as a support.
Mm.
It can just rebound magically like that. Okay. So when it rebound magically up just like that, okay, so it give you like, oh, okay, this is just another pullback before it continue go up high. We've cases after cases after it just pull back a little bit in this area. When they rebounded, it's like rebounded like quite high, even higher than, and it gives you even more juice. Like instead of you get 20%, you can go up like 30%, even to 60% kind of trade.
I see.
So
So
yeah,
basically, what it means is that on top of that, like 10 period trailing stop that you
yep,
have, you also use this like a 50 days EMA. So whichever the price touch and breaks first, you will
yes,
get out. Because
yes,
just in the event where there's a black swan event, market crash, within 1 to 2 sessions, it goes beyond or much more than necessary, you actually get out. So you actually use these two as a way to trail
yes.
the position.
Yes, yes. But again, it's like this. You don't want, sometimes I gotta tell you that during my session later on, I will share with you that there's some things that you can add on. But I will share with you a little bit here also today that sometimes some people get panic, right, Philip? Where actually when the prices went down, some of them they're too strict, like, oh, as long as it's penetrate below than 50 MA, I'm going to get out from this kind of trade, but they forgotten to actually look at the volume at a time. So you see when the price really went down and you look at the volume, it's just a little bit, is very small. So what does it tell you that, Philip, if the volume is too small? Means it's actually not much selling. It's actually was only still many traders still inside, but you see the volume is just relatively small. Means this player right here just want to sell. Probably they want to go for holiday, or probably they don't want to trade for this week, so they just want to sell. But at that moment at the time, the real buyer have not in yet. But when you look at the volume here, it's called just a weak sell. It's a, for me, that is a discount actually. So that volume relation is very important. So end up sometimes when you out prematurely, okay, and then you see another fresh volume coming in, zoom, the price go up, then you say, oh, I shouldn't sell early. But there you go. Again, I always tell to the traders, if you think that the volume coming in, don't worry. You always have re-entry strategy again. Don't feel
Yes,
sad
yes.
about that. But be careful about when the price go down too strong and the volume went up too high. Means the price go down, volume too high, it's really supporting that, the trend is going to be
Heavy
more.
sell off. Yeah.
Yes. So it's heavy, it's going to be heavy selling off. Yeah.
I see, I see. Okay, so let's move on to a topic which I am very particularly adamant about addressing with all the people who I interview in these trading conversations.
Yeah.
It's with regards to risk management and position sizing. What is your thought or the methodology you advocate with regards to risk management and how to size your trades so that you can control your risk?
Okay, so like I mentioned here, you need to have a very nice spreadsheet for this because um, for me, if I see a trader that with Excel file, means actually they really know what they're doing. Okay. Meanwhile, those who don't have the Excel file, they don't have their trading journal. I believe there's one guy mentioned. Is it Edmund Lee? If I'm not mistaken, he's
Edmund
mentioned
Lee,
about
yes, from the Philippines.
from Philippines. He mentioned about the trading journal. I think that is amazing. That is absolutely amazing. So, like say for example, like you have a big capital right here, and you willing to actually risk 10% out of it, but it's not the end yet. You see, it's more complex than that. So you're gonna take a 10% out of this as a total calculations. Okay. Now, if you trade in stocks, again, like I mentioned to you, you have to divide it into three level here. So if you have a blue chip, okay, and then you have a green chip, and you have the penny stocks right here, you have to divide it into three. So usually, out of the 10% total contributions. So say for example, if you trade the blue chip stocks, so usually you allow your stop around 5% because blue chip is quite okay, around 5%. So meanwhile, stocks that ranging between $1 to $10, that slightly less volatile, which usually very nice one. They swing very nicely as well, not too volatile as well. So I call that one is a middle weight kind of stocks. Usually you give yourself around 7 to 10% of risk. Meanwhile, another one which is the penny stocks, okay, which is the penny stocks, you're going to give about 15%. Now segregation out of this 10%, you segregate again with these three classes of stocks, is actually you need to put only about 20 to 25%, or perhaps the highest one is only 30% on the micro, or we call it the penny stocks. Okay, don't put a lot on the penny stocks. Usually you can put more a lot in slightly the middleweight kind of stocks and the heavy kind of stocks. So usually you can balance up in between. So maybe this one is already 30%, so you can divide it right here, maybe 35, 35. Okay, 35, 35. Or the best is you put it here, penny stocks is about 20%, and you put here 40%. Because sometimes blue chip stock is, gonna take you sometimes. So it's more about the diversification within the risk.
So I don't quite get what you mean by that 15%. So let's say, for example, I have $100,000 right now,
okay,
and there's these penny stocks that I want to buy. The current price is at $1. All right.
okay.
So how do I calculate how many shares to buy based on these parameters?
Okay.
And assuming that you mentioned that the stop loss is based on the 10 period breakdown, right?
Right.
Which means that if it hasn't happened yet, you won't know exactly where is your stop loss gonna be, because you need that 10 period to show you where that cut loss price is gonna be. So which means you don't have a cut loss price, absolute price yet. How do you go about deciding the number of shares to buy in this case? If you can just give a very simplistic.
Okay. Make it this way. To be very, very simple. Okay. So you have $100,000, dollar, right?
Trading capital.
Trading capital. Okay. So now out of all, okay, you don't want to risk, say for example, overall. Okay. First of all, as I mentioned right here, all of us have a totally different risk appetite. Let me ask you a question right here, Philip. Like if you have 100,000 capital, what is actually your risk size first? I mean, your risk appetite first.
You mean the amount that I'm willing to risk drawing down?
Yes.
Maybe about 10%, max 15%.
You see? So out of a 10%, right? So out of this 10%, so you need to segregate from these three type of level of the stocks right here that can contribute back to this 10%, because your major goal is actually not to lose more than 10,000 ringgit.
Yes.
Oh, sorry, $10,000.
$10,000. Yes.
Doesn't matter. $10,000.
Yes.
So your aim is actually this $10,000 is the clue. Never risk, regardless it's coming from which level, penny stocks or middle kind of stocks or blue chip kind of stocks. It doesn't matter as long as it does not contribute. But out of this contribution right here, out of this contribution of 10,000, you don't want to put too much shares, at the penny stocks that can contribute back to this 10,000. So out of this 10,000 here, the risk that you can risk, 15% or 20% will be at the stocks. Means say for example, like 10,000, 2,000 will be for the penny stocks. Means the penny stock, you cannot go more than 2,000 loss. Your maximum cap is $2,000. That's it. I'm done with the penny. Then the balance.
So on that point, if let's say I can only allocate 2,000 potential loss to penny stocks. So right now there is this penny stock I want to get in right now. The current price is $1. How do you actually calculate the number of shares to buy for this penny stock? Is it you just simply
you have to reverse
take $2,000 divide by the current price of $1, so you can buy 2,000 shares?
Yes.
Okay, so which means that you are actually allocating this 2,000 loss to a potential maximum loss, assuming that this stock goes bankrupt, and you are losing this $2,000, right?
So actually, it's like the best way to calculate is actually you have to begin with a chart first. Chart first. Now you're gonna measure. So in there's a software actually you can measure your percentage of risk.
Yes.
I believe your software also can do that, right? Trader Wave, right? So you can basically measure first, like from this level, the entry price to the lower channel. Say for example, to the lower channel.
Okay. So you have to like estimate where that lower channel is.
You have to begin with that one first. This is very important. You have to measure the risk first. So you measure that one first. So if you measure that one and you saw it, this is about, a 10% level from this. Okay. So now you have to reverse back calculation. Okay. So if I want to put, 20,000 ringgit, $20,000 here, $20,000 just for the stocks, I'm going to put in. If worse come to worse, how much I'm going to lose? 10%, right? Which 10%, is how much?
Yes, $2,000. So that's how you calculate the number of shares to buy.
So that is the maximum I can lose because from my total $10,000, I cannot lose more than $2,000 for penny stocks.
I see, I
So
see, I see.
you must do the calculation from the chart. So if you cannot, you adjust your capital because the risk in the chart, the volatility in the chart is the character of the particular the stock. So usually the best is actually you go for the lowest low, right? And then you give some more a breather. Usually you don't want to be too technical, like, oh, if this 10%, really 10%, give a little bit room, like somewhere between 13% again, because there will be a time there's a fake breakout, right? There's a fake breakout and suddenly it move up. So you give a little bit room to breathe. So you adjust a little bit. Instead of $20,000, maybe you reduce it a little bit, but you increase the risk. So at the end of the day, you still got to, okay? Increase the risk, still $2,000 risk, increase the risk so that there's a room to breathe, but you can adjust the capital amount.
I see, I see.
I'm
All right.
sure you get this
So,
one, right, Philip?
yes,
Yeah.
yes. So, Ezone, I would love to chat with you more, but we are running
Yeah.
out of time. So,
Yeah.
one last question from me. As you mentioned, you have actually coached more than 1,000 traders over the past 3 to 4 years.
Yep.
And if you could share, based on what you have seen in all these new traders that you have coached, what do you think are the 3 biggest issues or mistakes that new traders tend to have when they started trading, and how could they potentially overcome these issues?
Oh, this is a very good question here. Most of the traders that coming into the market, number one, the mindset. Seriously, this is it's not easy. It's not easy until today. I gotta tell you this, Philip. Number one, quick rich mindset. I gotta tell you this, Philip. Most of them they have a quick mindset. Doesn't matter whatever their background, they really want the quick, to be rich quickly. So, first of all, I'm gonna share with all of them. This is not a sprint. This is not a race in trading. It is a marathon run. It's a long-term run. That's number one. Number two, is it what you call analysis paralysis?
That means get stuck, they can't make decisions, they don't move, they use too much indicators.
You're absolutely right. I think you interview, if I'm not mistaken, Rainer Teo? Is it Rainer, right?
Yes, yes.
Analysis paralysis. I think he mentioned that one very quick because we don't want to have too much engineering, curve fitting. This is the second problem that I see a lot of traders. They say, oh, probably this one is not going to do. Why not I change a little bit here? I get a better result. Why I change this one? Okay, honestly speaking, I've been through this process as well. I'm not sure about you, Philip, but it's happening to me. I like to find maybe this market will be different. I want to change this a little bit. I want to tweak this a little bit. So analysis process, okay? Number three, right here, the biggest problem, and until today, I gotta tell you, Philip, is revenging in trade. I gotta tell you that I've seen this trader, few of them, they don't want to tell me, but I can check through their account. When they lose this kind of trade, they just feel like they need to make it back quickly. They need to make it quickly as soon as possible. So they become irrational in their trade and they basically become gambler. Instead of putting the amount, because normally when your amount is shrinking, you still have to do your basic calculation. Still back on 10%, you adjust back. If you grow, you adjust back. If you grow, you scale up back. If you go down a bit, you scale up it back, right? They don't have that kind of mindset. They look at the part where they lost the money and they put the whole chunk right there and hopefully they're gonna win back all the trade and they want to feel good. That's all. So these three is the main problem right here. But one thing is I've seen, I want to share with you this one of the big problems that I see. I have one trader, they lost 50% of the capital. Seriously, she already feel like she want to revenge the market. She start to blame the coach is not good, that one not good. Perhaps I gotta tell you, Philip, somebody does join this program. Maybe they got some nugget right here, but they say, this one not good. They love to blame. So what I do with this person right here is I say, okay, cool down. First of all, look at the market first. Is it the time for you to revenge nicely or not? At the time, the market is so bearish at the time. If you remember the Grexit, right? Back in 2015. I tell you at the time, the $1 trillion market in China, everything all tanked down. I believe that you remember that time, how bad it is during with the Greece exit, the European Union. So She wants to take advantage and revenge the market, but wrong time. So I tell her that, take your time first. Not now, not now. Take your time first. Take a deep breath. Look until the market recover. So what happened is actually during 2016, she wanted to say, hey, I need to, recover back my money. Relax, not the time yet. She said, I've been waiting for 1 year. I've been waiting for 1 year. I'm not patient enough already. I need to make the money now. I want to break even and I don't want to touch stock market anymore. I'm not sure whether you've seen this case, but it's happening to me. So what happened right here is actually 2017 when the market is a little bit recovering. There you go. She's not only recovering 50% of her portfolio. In fact, she make 50% again out from the whole entire ROI.
So I suppose she has decided not to give up after all.
She's still trading right now. She's still out of stock right now. She's a teacher. She have quite a big amount in the market. But yeah, I understand because this money is a hard-earned money. You know that we understand this money is all hard-earned money, but we want them to be actually rational, actually to to trade in the right market right now. So we need to check the all overall sentiment right now. Also, you understand that whatever happened to Trump and China, we're definitely gonna have a look at it, and we start to see the inverted curve. Right, we're gonna be extra careful already during this couple of years. Right now, we still haven't seen any pullback yet, right? I'm sure Philip, you're still wondering. Whoa.
Yes. Like what you say, Ezone, bottom line, the long-term uptrend, is it still intact? If it is, who cares what Trump says or whatever anyone says, right? As long as the trend
You are
intact.
right, Philip. You are right. Yes, absolutely, yes.
Okay, wonderful. Hey, Ezone, it has been a really insightful session for me, and I'm sure that's the case for the audiences as well. So thanks so much again for your participation in this interview.
Yeah, I want to actually thank you so much right here. In the bottom of my heart right here, actually, I just want to thank you, Philip. Actually, you did a really great job. Your traders mentors right here, I recommend some of the friends actually to read it out, and you give us a lot of aha moments. So in fact, right here, I want to thank you as well. You did a good job right here to call over all the great mentors right here to share together. So you actually the one right here did a really great job right here.
No,
Thank you very much.
don't mention it. Anyway, it's my pleasure. I mean, just like what you are trying to do, I'm also just trying my part to add true and real value to the trading community, maybe not just in Singapore, but around the region and around the world as well. So again, I'm just doing my part to add value to the community. All right, so thank you so much again, Ezone, for participating in this interview. And now for those of you watching this interview right now, before we end today's trading conversation, I'd like to remind you again that Ezone will be speaking and presenting in the Online Trading Summit 2019. And if you are keen to learn from Ezone and other top traders on how to profit from the financial markets, remember to head to onlinetradingsummit.com and to find out how to participate in this virtual trading conference. And of course, finally, if you would like to keep in touch with Ezone, please feel free to visit facebook.com/Ezone Constantine official. I will share the link below this video itself, so you can just click on it. And if you want to connect with Ezone, that's how you go about doing it. All right, so that's it for now, my friends. I'm your host, Philip Teo, and I hope to have you joining us again in the next episode of Trading Conversations.